we're talking about payroll taxes for the employer. I specifically chose to talk about employer payroll taxes because a lot of people don't understand that. They understand what's taken out of their check, but maybe not how it impacts the business. Because when you have money taken out of your check, that's your money. But your company is also matching that is taken out for some of these payroll taxes. Your employer, as well as you, owe OASDI, which stands for the Old Age Survivor and Disability Insurance, which is also known as Social Security, and it is 6.2%. In 2010, the employees portion actually went down to 6.0. So you may have noticed a difference in 2010 on your paycheck, slight difference. But the employer's percent is still 6.2. So 6.2% of whatever they're paying you is going to Social Security. Medicare, or HI, the employer's paying 1.45%. Now, Social Security actually has a limit. A lot of people don't know that. And I believe, let's see, for the years 2009 through 2011, the maximum was $106,800. That means that once a person would make that much, no longer did Social Security or OASDI have to be withheld from their check. No longer did their employer have to pay any. Again, a lot of people make under $106,800. This has tended to go up. What happens when the maximum goes up is the government collects more of that OASDI for those higher income people that had a ceiling. HI has no limit. Hospitalization insurance or Medicare, 1.45%. You could make $1 million, or your employer could pay you $1 million, and 1.45% would still come out for hospitalization insurance. I don't think that makes a whole lot of sense, because it shouldn't be the more we make, the more health insurance we have to pay. But that is the rule. Then there's two types of unemployment taxes. The federal unemployment tax has been set at 6.2, and it's been that percentage since 1988. Now that sounds like a lot, considering absolutely nothing going to the government is going to help you if you become unemployed in your individual state. But there is a 5.4% credit if your employer pays their taxes, their state taxes on time. So the federal government actually administers and makes sure that the states are doing what they need to be doing with unemployment. And that's a pretty stiff penalty if you don't pay it on time, if the employer wouldn't pay it on time, the 5.4% credit. Now, this is limited to the first $7,000 earned per employee. So there's a maximum on there. The maximum you would pay per employee would be $56 a year. And another thing to notice here are this 6.2% has been the same, as I mentioned, since 1988, but it was scheduled to go down by June 30 of 2011 because there was a 2% surcharge in there, and the surcharge was scheduled to go away. And I don't know at this point in time, even though we have passed June the 30th, if that 2% surcharge has been voted back or if it will really be reduced, because if the 2% surcharge was reduced and the 5.4% credit stayed the same, for those states that pay, or those companies that pay on time, it would be 0.6%. Keep in mind that is less than 1%, so that's a small number. What does the government do with that money? Well, they keep some of it set aside so that if individual states run out of money, they can borrow from the federal government. But states that are running out of money will not get the 5.4% credit. They can't get the credit if the state has run out of money. So, and there are some states in that position right now. And then the other type of unemployment tax is the state unemployment. Now this varies by state, and it also varies by company. There's a maximum, a minimum and maximum amount for each state has, and that depends on the rating that the company has. And the rating is dependent on several things, but if they've laid off a lot of people and they're their rate is going to be higher. If they're a new company, their rate's going to be higher as they go by and have a good record. It's kind of like your insurance. When you have insurance, if you have an accident, your rates are going to go up. So if you have a layoff and a lot of people go and file unemployment, the company's unemployment rate is going to go up. There's also a maximum, as I mentioned, the maximum for the federal is $7,000 earned per employee. But some of the states go up much higher with the maximum, and it's usually a much larger percent.